Now we're going to move on to the topic du jour, cryptocurrency. Everyone's talking about it this year, the swings, the peaks, the troughs, but should it form a part of any portfolio these days? And I'm delighted to welcome to the stage two people far more learned than me to talk about it. Simon Hudson, who is the founder of Cheeze, a Dubai startup helping content creators unlock the potential of blockchain, and Matthew Wright, digital trust leader at PwC Middle East. Welcome both to the stage.
Hey.
I'm just going to actually check while you're taking your seat. I'm actually going to check the Bitcoin price. 34,670. Yeah. Buying opportunity?
Definitely.
Or stay away?
I'm not a Bitcoin man.
You're not a Bitcoin man. Well, we'll come on to all of that in a minute. I'm going to start with you. I'm not going to really split you into pro and con, because I think that's going to be a bit unfair, because I think obviously the conversation around cryptocurrency is a lot more nuanced than that, and I think you'll both take both sides of the argument as and when we come to different parts of it. But if I could start with you, Simon, it has been a wild old year for crypto. You know, from the doldrums of last summer to the peaks of the spring, and then we kind of settled down a bit. What, from a purely kind of investment or pricing or valuation point of view, where are we right now, would you say, in the market?
Well, thank you for having me, first of all. It's nice to be back. I would say where we currently sit is in a correction point. I think there's been an awful lot of press, good and bad. I think the beginning of the year was very wild. We hit 60,000 plus on Bitcoin. Ethereum doubled. And I think that where we are right now is a very kind of equalization and correction point. There's going to be a lot of coins that drop off in the altcoin space. There's going to be new ones that come to market. And I think that we're going through this correction, and we'll see some steady out, some will continue to rise. I would say if you are looking to buy, now is a good time to observe and buy.
Would you agree with that? Is that something that you think that kind of, if we're looking at the way the market has kind of peaked and troughed, and we're kind of in this sort of middle ground between the highs of the spring and the doldrums of last year, if you're looking to get into crypto, would now be sort of a good time to start thinking about it?
Yeah, a couple of things. I do agree with that. I think actually we're in a good position right now for the markets. I actually think these corrections are quite healthy. One of the things I would add or want to say is that I kind of feel like you've got to split the crypto market a little bit. And what I mean by that is, if you look at it, there's kind of 4,000-ish cryptocurrencies are out there. Some of them are clearly legit, clearly legitimate. Some of them are clearly not. And I think when you sort of make any assessment of the market and whether it's a buying opportunity, I think you've got to kind of look at the two ends of the spectrum and assess the fundamentals. So where you're looking at the more mature assets, stuff like Bitcoin, stuff like Ethereum, I do think there are buying opportunities at the moment. And I think when you look at how that will progress in the short to long term, I think that would be pretty positive. Stuff like the regulation debate, the energy debate, I think personally is a good thing for Bitcoin in particular. But then you kind of need to separate that from what I would say meme stocks, meme trades at the moment, which can be a lot more volatile, a lot more risky. So,
how do we judge legitimacy in this space? Is that just about longevity? So Bitcoin's been 2 or 3 cycles, Ethereum's been through 2 or 3 cycles. What is deemed legitimate? What's the kind of the test case that we can apply to a cryptocurrency to say, yeah, this thing is legit, and this thing, if I put my money in it, I'll probably have it next year?
Yeah, that's a great question. If I knew the answer to that, I'd probably not be sitting here. I'd be pretty rich by now. I think there's a few things driving that. Again, one is the underlying kind of what I would call kind of tokenomics of it. So what is driving the value of that? What is driving the price? What is the technology underlying that? So for example, in Bitcoin, a lot of people go on about this fixed supply, relatively speaking. And that combined with the demand creates scarcity, and that drives price. You've also got the other factors to think about, like the communities themselves. So you need a healthy development community. You need a lot of engagement in that. And I think when you put those two things together, it creates a bit more comfort over the legitimacy of what's actually going on at any given time.
I'll come to another point, but I just want to pick up on something you said as we sat down. I'm not a Bitcoin man. Just explain why not, and what are some of the other coins that have caught your interest and why, Simon?
I think what Matt just said about the kind of underlying tokenomics of the currency, and Bitcoin was the OG of the coins. I mean, you know, some people I speak to today think that Bitcoin is crypto. They think it's, you know, this comes hand in hand. So Bitcoin for me has always been one of those that has a kind of entry point into other markets. Ethereum is very much pegged to the rise and fall of it. But like you said about the supply, Bitcoin is kind of like gold in a way. And there is going to be, I think, is it 2024, when there's not going to be any more coins that will be able to be mined. And it's not very flexible. There's no developer ecosystem. You can't build smart contracts on Bitcoin. The way that it moves is very archaic and very slow. The whole kind of, you know, fossil fuel debate and talk around this, and if you look at how quickly Tesla said they would accept Bitcoin and then they said they're not going to accept Bitcoin. I think they sold about 100 Teslas in total. And you know, if it is treated like gold, you wouldn't go and take your gold out the safe to go and buy a car. You would use your kind of frequent currency that you have, and I think.
So this is Bitcoin as a store of value rather than a unit of transaction.
Yeah,
it's not actually a currency if you put it in those terms.
Yeah, I mean, you know, we as a company, we build on blockchain currencies, and you can't access and build anything on Bitcoin. So you lose that whole kind of ecosystem and community, like Matt said, behind it. So for me, Bitcoin is there as an entry point, but as an actual product, coin to buy, I don't own any Bitcoins.
So what then would explain, Matthew, its rise in value from, I mean, I think it was trading at under $8,000 this time last year.
Yeah, something like that.
It exploded to 64, 65,000. It settled down to about half of that. Why are people investing in it? Because it's not just retail investors on trading platforms like the last panel. These are kind of governments. These are institutional investors. An Arabian business columnist, Anthony Scaramucci, said he's now got $500 million worth of Bitcoin under management now. Why are they investing in it?
Okay. All right. So look, first of all, I think this debate about whether it's a currency or a store of value is really, really important. I'm on the store of value side. Various reasons for that. But I think that's a debate that will play out over the next 5 to 10 years as to what Bitcoin actually becomes. So I think it is this digital gold narrative that is driving that investment. But fundamentally, what's going on, or the macro narrative that's driving that, is essentially the money printing, the support that governments are giving to their economies as a result of things like COVID, and they're effectively printing money which is devaluing that currency, in particular the US dollar. So institutions are looking at Bitcoin as a hedge against that inflation, and because there's a fixed supply, demand goes up, price goes up, so they're piling money into this as a store of value. That in turn has brought the retail investors in behind it, and that's essentially why we saw Bitcoin rise to about $64,000 in the last few months, with a little bit of help from Elon Musk on the way up and on the way down as well.
But you say that in terms of supply. Well, there's only going to be 21 million, I think it is, at Bitcoin, and that's going to run out in a couple of years. Okay, fine, but where's the value? You know what I mean? Just because there's not many of them, why is it being seen as a store of value? Because Bitcoin, I would imagine, is only valuable because of the community around it believe it's have value. And if that entire community kind of goes, well, you know what, I don't believe in Bitcoin anymore, I believe in this new cryptocurrency, what's going to retain its value?
Yeah, I do believe that to a certain extent, right? I think the tokens themselves, and this probably goes for all of crypto, have no real intrinsic value. Rather like the paper that money is printed on, there's not a lot of intrinsic value, but convention and people's belief in something as having a store of value will drive the utility of that, and that in part is what is keeping Bitcoin going up.
Do you agree with that? What's keeping the crypto space kind of buoyant in terms of people moving money into it because they believe, obviously, there is a line of growth in it? I mean, we can talk about blockchain technology and smart contracts and the utility of tokens and the utility of the platforms on which these coins are built. But most people are entering the space, really, because they believe if they put $1 in today, it's going to be worth 10 in fairly short order. What's kind of keeping the values climbing?
I mean, I personally think that Bitcoin, like I say, it's been around the longest. It was kind of the initial internet of the coins. It was the first to market. And there's a huge amount of following behind Bitcoin. When companies do come to the market, like we saw, Tesla came and Square have bought a lot. Jack Dorsey has been very supportive of Bitcoin for a while. It's about having this asset on the books that is going to, in their eyes, have some stability. And I think that Bitcoin, yes, this is a very unusual time. We have seen it in the past, but it is quite a stable. It's not one of these like Doge or Shibu that goes up 200% and down 400% and fluctuates a lot. It only goes up 6 or 7%. And I think that the people who want to get into this space are choosing Bitcoin as an entry point, because from Bitcoin as well, you can trade onto other currencies and move around. So it kind of does work and let you cross-trade across other currencies.
Okay, let's go into that entry point. Okay. We got quite geeky quite quickly, I think, didn't we? But let's go right back to the thing. I don't have Bitcoin. I don't have any cryptocurrency. I've seen all the ads on YouTube and on my TV for various trading platforms. What's the best way to enter this market if I want to do so now?
I'm going to comment on personal experience from people that have asked me, and it's good and bad. When things are great, you're the best friend, and when it crashes, they hate you. But my answer's always been, choose a platform initially that is safe, that is not going to be a gimmick or is not going to be untrustworthy. So Coinbase or Binance are the two. Obviously, depending on where you are in the world and what accounts you have, limits whether or not you can set that up. I have a UK account, so I'm lucky enough to be able to set the Coinbase account up. And then I always say choose one which is in the kind of trustworthy, stable current coins, like a Bitcoin, Ethereum, Cardano, and then use 50% of your portfolio that you're going to invest to look at other coins that have got the potential to make a 100x in a month or so. But do the research. Like Matt said, it's every coin has an underlying technology. It has something that is coming to market. Cardano was started by one of the people who was on the original Ethereum team. They've got some awesome things they're bringing to the market. You've got Polkadot, that's another one, which again, if you do the research and look into it. So there's all these news channels that you can read about. Me and you have had some great chats on Twitter about different coins and things like that. And I think you've got to be interested. You can't just put your money in and think, right, I'm going to make $1 million. You have to kind of be a bit smart and understand what it is and get into it and understand the actual coin that you're investing in.
Yeah, I think this is the ultimate case, isn't it, Matthew, of like, do your research, understand what it is that you're buying. If we buy a Netflix stock or we buy a Facebook stock, we can judge past performance, we can judge metrics that are available like subscriber base or customers or unit sales or ad sales or things like that. What are the metrics that we should be using to judge different cryptocurrencies?
Yeah, okay. So yes, definitely need to do your own research, and there's a lot of sources out there for you to be able to do that. Not necessarily traditional sources, but there are a lot of sources out there to do that. One way I certainly got into this and did research was actually just to buy a little bit of the coin. So you buy and hold a little bit of it, and you start to understand why it's going up and why it's going down. I wouldn't say there are specific metrics per coin per se. I think you've got to treat each one on its own merit, starting with, well, what's the use case of this particular coin in the first place? So with Bitcoin, maybe it's digital gold. With Cardano, maybe it's something else. You need to understand why, what's behind this, why is it being created, what is it being used for, and evaluate the merits of that coin on that basis. That's how I would normally do it. You do need to do your own research.
So when you look at the last 6 months and these kind of quite wild swings in prices, does that for you suggest that yes, this is an investment that can make someone a lot of money? Or do you look at the flip side and go, this is a space that is fraught with red flags for people that don't know what they're doing and get in at the wrong time?
Yeah, it's both. So look,
I felt it might be.
Some people are going to make a lot of money out of this, out of crypto trading, out of Bitcoin, and some people are going to lose money, and that's a little bit unfortunate. We've got some circumstances that I think are a bit unfortunate at the moment. So we've got trading platforms that allow retail investors to jump in on 100 times leverage. That isn't really helpful for crypto, because what you're getting is people chucking their life savings into that and losing lots of money. You're also getting, because of the profile, you're getting a lot of scammers. I know somebody, through a friend, probably a few weeks ago, that because of the Bitcoin hype, someone had contacted her and said, oh, you want to invest £35,000 in Bitcoin. And she's given this guy £35,000, and of course, there's nothing behind that. So some of what's going on is unhelpful at the moment, unfortunately. And I do think some people are going to get rich, probably as you said, the people that do their research, that really do understand how this is playing out. And some people are going to jump on a meme, put a load of money into it, like Dogecoin, and then lose that promptly when somebody says that it's a scam on TV.
I was going to say, Simon, I don't know how much you're into sort of financial markets generally, but how much does something like technical analysis even work in something like crypto? How do things like, amateur investors understand the direction of travel in the market, particularly when it seems as though a few small players, the whales as they're called in this space, can control the market almost in a minute's notice?
I think the technical analysis of anything, if you're starting a company and looking to choose a server, do you use AWS, do you use Google? I think that the same when it comes to buying stocks. Like you said, do you buy Facebook, do you buy Tesla, do you buy Ford? There are going to be things that you analyze and look at, and from a technical analysis, a lot of coins at the moment are based off the Ethereum blockchain. So a lot of coins sit on the actual Ethereum blockchain. The Ethereum blockchain is now become super crowded. So these things called gas fees went through the roof. They're super low right now.
A gas fee is basically the cost of moving an Ethereum token from one wallet or one place to another, right?
Yeah, it's kind of the fee it's like a bank charge, if you like, for a credit card transaction. So I think the technical analysis is extremely important, but ultimately a general understanding of the space is equally important, to be able to understand, what is a blockchain. You don't need to be an actual expert, but just to have a basic knowledge. It's a bit like the internet. If somebody said, what's the internet? We have a basic knowledge, but going into detail. So I think technical analysis is, for me, it's extremely important, and I would advise people to get into this space, to really do some research, to be comfortable in it, not just drop some cash in and hope, or give £35,000 to John on the end of a phone and say,
Don't do anything off strangers off the end of phones,
Yeah.
particularly at that level. Matthew, you had a little bit of a chuckle when I said technical analysis about graphs and charts and Bollinger Bands and Fibonacci curves and all that sort of under the hood stuff. Does that even work in this space?
So I think it's in some ways it's like a self-fulfilling prophecy, right? So there are a lot of traders in this space now that are trading crypto across the board, and traders use those techniques in order to predict price, and therefore, because they're using them, they buy at a certain point, and therefore everybody buys at a certain point. So the fact that there are traders in it and traders use technical analysis means it kind of works, right? But I feel like that's a bit of a self-fulfilling prophecy. I don't think we understand enough about the markets at the moment to understand what's driving them. Another kind of alternative to that is on-chain analysis. So there's a lot of companies out there that will analyze the movement of coins directly from the chain. So who's holding what, when a coin or a lot of coins get dropped onto an exchange could indicate a big selling event, for example. That is also a related or alternative way of looking at some of the bigger coins, at least in terms of how they're going to behave and what's going on. So there's a lot of stuff going on out there at the moment with that.
Yeah, because that self-fulfilling prophecy element feels quite real when you look at the chats. Like there's a platform called eToro that's essentially a social trading platform where you get message boards going. Well, if it drops beneath 34, I think that's selling. Then it's gonna go all the way to 29 based on my thing. So of course, when it goes below 34, everyone sells.
Yeah.
So that's the self-fulfilling prophecy because it's kind of driven by this community, which must be quite scary again for people entering the space for the first time.
Agreed. And on top of that, you've got other platforms now that will send out trading signals to people: strong buy, strong sell. If everybody's using the same trading platforms, then everybody's going to buy and sell at the same time or there or thereabouts. So I think that again, there's a challenge in that, and the challenge is that these assets are not kind of deep enough. They don't have the liquidity to handle large kind of inflows and outflows without vast swings in price. I mean, Bitcoin, I can't remember what it is today, but let's just call it $1 trillion asset. It's less than that, but let's call it $1 trillion asset. That just isn't liquid enough to be able to take somebody like a large organization or institution, moving a couple of $1 billion worth of Bitcoin out without a large price swing. So I think that is a factor as well in making this a little bit more volatile. But in answer to your last question, yes, I do think it makes it quite scary for people. I'm a big advocate of more education in this space and getting people to really understand what these things are and how they're behaving and why. Because until we do that, I think you're going to get this fear, which is going to cause people to dump all their coins, like we've seen in the last couple of weeks, really, off the back of something that's quite benign.
And I'll be honest, for me, with talking about the graphs and the charts, I tried it. I went and set up a TradingView account. Got a big monitor. Thought, right, I'm going to be. I'm going to
Wolf of Wall Street. There
yeah, I'm going to be him.
The Wolf of Al Wassel.
And the truth was that I didn't really understand it enough, and I don't think that the predictions that people were making actually were correct anyway, because they'd say something. The other day, about a month ago, somebody said Bitcoin's going to be at 160,000 by the end of May. Well, it's the 31st of May and it's at 34.
There's still time.
So for me, my view on it was to treat it a bit like a company and a tech startup, in that look at the people behind it. So why is this coin coming to market? What is it actually going to do? Is it just some dude sitting in a room making a coin and putting it out there? Or does this actually have a meaning and do something? So I think that it is good to have this analysis. I think it is still very premature to be able to understand, and from my experience, nobody's got it right. So, yeah.
I'm going to ask a question that's obviously very much in the news now, and this has been prompted by the audience, but it was something I was going to talk about anyway, and that is, how does something like Dubai Coin make it to where it gets to an exchange before being called out as something, let's just say, not quite as legitimate as it was first posited, Matthew? And what do we do about it, and how can investors beware about the next one that comes along?
This is a fundamental question about regulation of exchanges, unfortunately. And a lot of people that are in the crypto space don't like the idea of regulation. I think it is essential to stabilize what's going on. Each exchange will make a decision about which coins it will list and which ones it won't. Exchanges like Coinbase actually list very few coins relative to others, and they do a lot of analysis around that because they are regulated, because they have regulatory obligations. Others don't do their due diligence. There's a lot of payments being made to exchanges to list coins, so quite possible. I don't know a lot about Dubai Coin. I did see it pop up. I think it was about 1,000% overnight or something like that. As soon as they announced it, it just went up 1,000%. It's a classic example of a scam. Could well have paid an exchange or a number of exchanges to list their coin. That has certainly happened in the past.
The old pump and dump.
Yeah. So the only way to deal with that is to have better regulation around exchanges, and also better education of people to look at things like this and think, well, hang on a minute, why is this guy announcing that if it really is the coin of Dubai? Why is this person doing that? What's actually going on before they invest their money?
Simon, a couple of things are going to impact the crypto market as it matures and as we go forward. And I think there are two main ones. One is government regulation, and the other one is energy consumption. So I'll start with the regulatory environment first. Where are we in terms of the regulatory environment? Are things kind of established in terms of North America's kind of comfortable with crypto? China and India seem a little bit less so. Where are we, and how can we predict how that environment is going to change and what that will then do to the markets?
Well, I think from what I've read over recent weeks about how the governments are coming in, they're definitely taking a hold of it now. There are a lot of companies I've read in the States that are talking about how to understand what taxes you need to pay on the crypto gains that you make. I've not heard that before. That's something that's quite new. China are obviously doing things too, and the UK have been in talks about regulating certain assets, but it comes down to the exchanges. I think it comes down to everybody working together. If you have an exchange that comes to the market and lists lots of coins, and there's no understanding of actually how you would, is this fraudulent? Is this a way to, for people, drug lords to sell things and make money? Is this a way for money laundering? So I think that it comes down to actual understanding of bringing everybody together in a way that they're all talking in sync. And I think that has started to happen and will continue, and there will be some platforms that suffer from that who haven't made the right check boxes, but I think it's coming and it's a good thing.
Why do you think countries like China have banned Bitcoin? Is it because they're fearful of what that might do to their own fiat currency? Or what's kind of the prime movers behind them going, right, no, you're not allowed to trade this stuff?
Yeah, I think it ultimately comes down in the fact that the control is not there, and they rely heavily on the actual ecosystem working in finance. So I think that just because it's so easy to move money around and not be tracked, until there are regulations in place and people actually have to adhere to certain processes, I think that's probably they've just gone, boom, close the door until it's figured out. I don't think it will be closed forever.
I'll come to you, Matthew, on the energy consumption point. Is that an inherent weakness in something like Bitcoin, which is the biggest and perhaps the clunkiest of all the cryptocurrencies? Are concerns about energy consumption, how much energy it takes to mine these things and to verify the transactions, which essentially is the means of exchange? How big a deal is that, and how mindful should investors and potential investors be on a long-term basis?
Yeah, I think it's an important debate. But I think that up until now, sort of the wrong questions have been asked. It's not about how much energy does Bitcoin consume per se. So, I mean, you've got two fierce sides of the debate at the moment, but one would say it's 0.1% of the world's energy, which is a relatively low number. For me, it's much more about, does Bitcoin or something similar incentivize the use of fossil fuels or not? Right? Does it mean that it's more likely that we are going to produce more energy from fossil fuels or not, or does it incentivize the renewable energy debate? And I think it probably incentivizes the latter, as my personal view, over time, because it's cheaper. The energy is cheaper, and that is the primary cost of producing a Bitcoin is the energy. So at the moment, obviously, there's this fierce debate going on. It is an important debate, not just for Bitcoin, but for everything. The other bit, of course, is the different protocols that are coming out. There's this question about, is proof of work versus proof of stake better? And again, there are advantages and disadvantages of both. I think it's a debate that needs to happen. It will probably play out over several years. It's disrupted certainly the price rise of Bitcoin at the moment. I think it will continue to disrupt that for at least a short period of time.
What was interesting was Elon Musk saying, well, actually, we're an electric car company. I can't have anything to do with something so... He knew what it was costing an environmental stake, 3 months earlier when he put all of his $1.5 billion into it. Was that a bit of market chicanery on his part?
Yeah, he's a smart guy, isn't he? I think he knew. I suspect the reason Tesla are not accepting Bitcoin is not really about the energy debate. It's about something else. off the top of my head, compliance would be a huge problem. How do you verify? How can you take a transaction? How do you verify that where this has come from? There's a huge compliance burden, a huge regulatory burden to do that, not to mention all the other tax credits that he's trying to get from government. So I suspect the reason isn't quite energy, but it caused a big fuss.
So let's look at the purpose of why we're all here today, and that's essentially we're looking at people wanting to get started and preparing for their financial futures. From a sort of a macro level, should cryptocurrency of any stripe be a part of a modern investor's portfolio, and sort of to what extent do you think, Simon? Like, kind of what are we talking, it should be 5% play money, or it should be, 20%, 25%, because this is the future?
Personally, I would say yes. I think it should be. For me personally, it is. I'm more into investing using crypto than I am into typical stocks and shares. I like the instant gratification vibe of it rather than putting it in and holding it. I do remember about 2012, somebody said you need to buy Tesla stock, and I said no. Had I done that, that would have been a great win. I think that the market and the world move so quickly that for me, I'd like to move on a lot more nimble basis, but having assets in other stocks and shares as well. If you want, I think for me, crypto is 70%, 30% others, but I think for other people, it might be worth flipping that round if you don't feel comfortable with the space. But I would say yes, get into the market and not put money in that you're scared to lose. I think you do have to feel that you might lose it.
But 70% is a fair old chunk of change. What is it about the space that you believe that in 10 years' time, say, or maybe you've got a different investment horizon, but in 5 or 10 years' time, that you will be better off having made that investment now?
Because this is what we're in the blockchain space as a company. We've got 15 staff who are employed through that actual underlying technology. So I feel that my understanding of it is enough to be able to then bet heavily on projects and speak to the founders and actually do Zoom calls with people from the high-level boards in Cardano and things. So for me, I feel I've got a more of an understanding in that space. But yes, this is my industry, so that's why I'm quite heavy on it.
This for you is like investing in Amazon in 1998. You feel as though you understand where it's going and you're getting in at an early stage.
Yeah, and I think that there's a lot of people saying Silicon Valley that you speak to today who are the older generation, that they got in and made a lot of money because they were in the coffee shops and having pancakes with the Amazon team and the Apple guys, and they knew what was coming. It wasn't just they read about it in the news. So that's my view.
Matthew, same question. Sort of, is this an intrinsic part now of an investment portfolio?
I think it is. I would be. For me, it's a lower percentage, but I think Simon makes a very good point. It's about where if you really understand this space, I think it can be much higher. But I think, generally speaking, and I sort of, to be honest, rely somewhat on some of the major banks that are putting this out there. Somewhere between 1% and 5% is probably, for me at the moment, what I would say is sensible. Level. But I do think it's a part of any investment portfolio.
And we don't give investment advice. We're not allowed to.
Of course.
But what I'm going to ask you both is, if you were going to make a crypto trade right after we leave the stage, and I gave you $100 each, what would you be putting it in?
I'd put 50% in Cardano, ADA, and I would put 25% in Polkadot and 25% in Matic. And these are three coins that have got underlying technologies that are bringing things to market in the next 3 to 6 months, and the teams are experts and have not just started a company. So those are the three I would say. Same question, Matthew, or would you just go out and buy a good lunch instead?
I'd be all in on Bitcoin.
All in on Bitcoin. Again, not advice, that's just what they would do. We have to bring it to a close. I'm very, very sorry. I enjoyed that enormously. Again, it's one of these subjects we feel as though we've only just scratched the surface. So Simon Hudson and Matthew, thank you so much indeed for taking part of this thing.
Thank you.